Okay, our next fireside chat is also going to be fantastic. We have Pierre Rochard, who you heard from yesterday, CEO of the Bitcoin Bond Company and co-founder of the Satoshi Nakamoto Institute, and the creator of the best satirical video eviscerating the FUD bullshit being said about the Bitcoin mining energy usage. And he's joined by Cory Klippsten, co-founder and CEO of Swan Bitcoin, well known for sounding the alarm on some of the biggest blow-ups in crypto history, including Luna, Celsius, and if that wasn't enough, FTX. He has a reputation as one of the space's most trusted truth tellers. Please put your hands together for Pierre Rochard and Cory Klippsten.
Great to see you all here above 117K. Pierre, how are you?
Very good, very good. Thank you.
Excellent. So on the heels of Mr. Saylor's talk yesterday, and obviously lots of interest in the Bitcoin treasury space and innovations there, I wanted to ask you, as a historian that you are, in the long history of financial instruments on this planet, has there ever been a case where someone has tranched returns and used a financial asset to create a lower risk-reward asset and a higher risk-reward asset?
So I would argue yes. So for example, if we go look at what Bitfinex built, very early on in the Bitcoin days was this margin trading product where there's people who want to try to outperform Bitcoin and take on more risk. They would go leverage, and they still do go leverage long on the margin. And then you have people who actually want to take on less risk than spot Bitcoin, and they would contribute dollars to the margin pool and get paid interest on that, essentially. And so there is a long history of financial intermediation between people who want more risk and less risk in the Bitcoin ecosystem. I think the big breakthrough for the Bitcoin treasury companies is taking the liquidation trigger off the table. I think that has been a source of a lot of Bitcoin's volatility, is this issue of cascading liquidations where Bitcoin will go down 20% and then you have forced selling from leveraged long traders that drive the Bitcoin price even further down. What Saylor has constructed, one on the convertible notes, convertible debt side, is that it has a very long maturity. And so by having multi-year horizon, that he's not worried about getting liquidated day to day based on what Bitcoin does. Despite what all the Twitter trolls think that, if Bitcoin goes to 80 grand, he's going to have to liquidate, right? He has survived a bear market before, and even with an MNAV at less than 1x for a whole month, I think, in 22, and then it bounced back. And so the second innovation is the perpetual preferreds of saying, well, let's take the maturity off the table as well and not have that refinancing risk so that he can go leverage long Bitcoin in a way that, as he says, is very intelligent, right? And so it's a huge evolution from where we were 10 years ago with Bitfinex. And then, of course, in the intervening years, we had BitMEX and other kinds of, now today, Coinbase, I think, announced that they're going to do perps as well. And so the leverage there is going to continue, but I think that for investors with a long time horizon who don't want to have that liquidation risk, that Bitcoin treasury companies are going to be increasingly appealing. And then the big question is going to be, what price do you pay for that, right? So there is such a thing as paying too high of a price for a security in any kind of context. And so we'll see how those multiples mature and the industry matures.
Yeah, it's interesting that you mentioned the launch of perps on Coinbase, because that's actually kind of like a zero-day event for altcoin trading among folks that are high-volume traders. I have a close friend who used to work for me as a head of trading, who also used to run North America for Cumberland, which is the biggest OTC desk in the world. And he told me that the launch of perps on Coinbase basically kills altcoins forever, because they've essentially been all that people with 6 screens could trade before. But actually these traders, they just want something that has a lot of motion and a lot of leverage and a lot of volatility and a lot of liquidity, but they'd much rather work with a centralized platform with customer service and good tools and never have to mess with like DeFi, getting pwned on MetaMask and all this other crypto stuff. They just want to trade high volume, high frequency as fast as possible.
Yeah, and I think that in the past they had to go to offshore platforms with a VPN, or go to DeFi platforms on Ethereum or Solana or whatever. But with this new regulatory environment, all of that can come onshore in regulated venues. And the other part of it too is that a lot of people were trading altcoins because they were trying to outperform Bitcoin. And so they would actually use Bitcoin as their unit of account while they were trying to get in and out of small illiquid pump and dumps. And so if they have an opportunity where they can actually try to outperform Bitcoin in a cleaner way that doesn't have the decay of the constant debasement of altcoins, that it keeps that capital inside the Bitcoin ecosystem, and while still meeting kind of their you might uncharitably call it a gambling addiction in some cases, but in other cases they might have an edge. They've got a lot of skills at looking at charts, which I don't have. I'm perma-bullish, but I think that's an interesting evolution. The other is on the forced selling. So we've seen weeks in this space of Bitcoin treasury companies where the stock prices are getting hammered, but the Bitcoin price is just going sideways. And that they're not, because they don't have to, the treasury companies don't have to sell the Bitcoin when their equity is getting hammered, that I think that it actually is going to provide a buffer for Bitcoin where they might even still be buying, right? Like we've still seen Saylor buying, and I think that it's a new phase in Bitcoin's price evolution that we don't have this forced selling from leveraged long positions.
Yeah, I think that's absolutely right. So on the subject of Bitcoin and crypto, or Bitcoin not crypto, or whatever it is, it felt like really since I met you and Jimmy and got into the space in 2017-18, we fought it out at the top of funnel for Bitcoin versus altcoins, and $100 billion of altcoin VC money put it all under the crypto umbrella, and Bitcoin was just one of the cryptos, and it was like on the Coinbase homepage, it would be the number 13 or number 14 coin for a long time. And it seems like the thing that changed it the most was the launch of the ETFs in January 2024, and that basically turned it into Bitcoin and crypto and made the top of funnel a brokerage account for a lot of people as opposed to a crypto casino. And interestingly, at the same time, there was obviously a massive flood of donations in this town mostly from the crypto industry, the non-Bitcoin crypto industry for the most part. And yet, it still seems like somehow we've successfully ended up in a world of 2 different distinct asset classes in the minds of the media, the markets, and regulators, frankly, and increasingly legislators. How and why did that happen? It seems like it was counter to the interest of the crypto people to not have it all be in crypto, and yet here we are with Bitcoin and crypto being separate.
Yeah, I think that you can only fight product market fit for so long, right? So I think that if we really dumb it down to Bitcoin's just digital gold, it's a scarcity, then that has product market fit. The utility tokens, the product market fit there, charitably, is still a question mark. Uncharitably, what was a fit was essentially these VC coins dumping on retail and not really delivering on any kind of utility. But I think that the reason why the utility tokens have really struggled a lot is because ultimately what they're trying to do is tokenize a real-world asset. And the reality is that a real-world asset is always going to be centralized. And so that's where there's kind of a mismatch between the technology and the underlying asset. The most successful tokenization, and I would argue maybe it will be the only successful tokenization, we'll see, but is stablecoins. And there it highlights the second problem of even if you do accomplish some degree of product market fit of tokenizing a real world asset, that issuer, who is centralized, right, Circle, Tethers, they're going to have an incentive to get off of your platform and to build their own blockchain. And we even saw it, for example, with, I know the NBA had NFTs that came out, and then they launched their own blockchain because they felt like, you know, the Ethereum blockchain was not fit for purpose. And so there's always going to be this splintering of kind of wanting to capture all the value for yourself and not wanting to just hand money over to the Ethereum ecosystem. Because at the end of the day, launching your own blockchain in this current regulatory environment is permissionless. And so there's no reason why Tether and Circle need to be paying rents to third parties.
Yeah, I had a very cordial, for me, conversation with someone yesterday here at the conference who was down here from Wall Street and had been listening to Lubin and Tom Lee and, you know, the ETH L2 narrative they're pushing right now. And I simply asked him, you know, how much does it cost to send an Ethereum transaction for $1 billion, and how much does it cost to send it for $1? And he thought for a minute, and he said, well, they're the same. And I just stared at him for a while. You know, the point is, like, they're going to do this where it's, you know, super cheap, and it's not going to really flow through, even if they do settle occasionally between themselves. Like, it just doesn't really matter. And yeah, I think you're seeing Stripe launched a blockchain, and JP Morgan has a blockchain, and I think Tether has 2 new blockchains to trade Tether really cheaply, like Plasma and something else. So yeah, I think that's the way it's going to go. So I want to shift gears here about halfway through, and you know, here in the heart of American power and culture and freedom in DC, you know, how I wore my Bitcoin USA flag t-shirt on the first night here. Thanks, Neil from FOMO21 for that. And you know, how does Bitcoin align with, and where does it maybe diverge from, in certain ways, the ideals and sort of the protocol of the United States?
Yeah, great question. So I feel this acutely coming from Texas, that the ethos of the United States is a combination of individualism, liberty, but also having community, right? And I think that Bitcoin's ethos is aligned with that, and it, very strongly from one, the self-sovereignty aspect of it, that you can hold your own keys, run your own node, and if you go back to where the founding fathers, you know, put together the Bill of Rights, like Bitcoin, I think, is the most rights-respecting system in human history. It really does empower individuals to be able to control their own money. So just from that alone, I think that that appeals very strongly to the roots of American values. Then if we look at what we can build on top of that, right, of essentially capitalism, right, and free enterprise that is downstream of that, again, Bitcoin has gone from being worth $0 16 years ago to being worth more than $2 trillion today. I think we just hit 117 grand, so that number is subject to further increases and decreases. But the point being that it really represents a tremendous success story of the free enterprise creating a price signal that contains a lot of information. And so I think that has driven kind of the conversation forward, both in DC and in Wall Street, where if Bitcoin did not have this tremendous value appreciation, maybe it would have less of a political constituency to it, right? It would be, I often bring up Esperanto, right, of, oh, we're going to create this new language, it's going to be a synthesis of other languages, but how do you get adoption for a new protocol like that? It's very hard, and there's network effects around money that are very entrenched. And so I really think that Bitcoin's scarcity has been a differentiating factor to create that value accrual and then to create the political support and the financial support. Because now the third part is on the community side. Bitcoiners, I think, our intention of they want to be self-sovereign, but there's also a global consensus on Bitcoin. And that, I think, is challenging, for example, in today's core versus nots debate. But it's also, I think, challenging from the perspective of a lot of Bitcoiners, coming from that individualism stance. They see BlackRock adopting Bitcoin. They see Trump signing an executive order for strategic Bitcoin reserve. And that gives them anxiety that somehow Bitcoin is being co-opted, when really I think that they're not thinking about it correctly. And interestingly, Larry Fink is thinking about it correctly, where he was on national television and he said, Bitcoin sits above governments, right? And I think that's actually correct, that governments, corporations, individuals, we're actually all on equal footing in terms of having to integrate ourselves into the Bitcoin system, right? It's not like we're going to be able to change Bitcoin to adapt to our needs. Rather, we have to actually change our own approach to money, to savings, to technology, and so I think that Bitcoin is actually co-opting the government and co-opting the financial system in the most positive sense, imaginable.
Yeah, this makes me think of just kind of a shorthand way to explain what's going on with Bitcoin, and it's one of those few things that come along where it takes the conversation out of the realm of what should be, and it gets it into the realm of what will be.
Yeah. And what is.
And what is, yeah, and that it's kind of inevitable because we have empirical proof of what it's already doing. And so it's actually going to enforce, and already is enforcing, through being borderless and being something where I can take it in my head or in my little device or whatever and spend anywhere in the world or just send it from here to there. It does make the whole globe sort of align with a capitalist vision. And it seems like it might be the thing that finally kind of ends these social studies arguments about political systems and what should be, where people are just sort of theorizing on both sides. But now we're starting to see empirical evidence. Even if you don't think that's the way it should be, that is how it will be. And you can either fight that and lose, or you can align with it and then try to accomplish your other goals within the system that is going to be.
Yeah, I agree. Another way of conceiving of Bitcoin is that establishing property rights in cyberspace creates a new dimension for property rights that is global. And so even if you're in a jurisdiction where you can't rely on the government to defend your rights, you're now empowered to defend your rights in a way that it's inconceivable with a physical object like gold, right? Because with Bitcoin, you've got 12 words. You can memorize those words. You can walk across borders with those words. You can't do that with gold, with diamonds, obviously with physical cash. And so I think that is introducing something completely new to the world. And likewise, I think that going back to the question of on Wall Street, it's really interesting that the BlackRock's marketing for Bitcoin highlights what we're talking about here is the permissionless nature of it, while at the same time, they're selling a product that is permissioned, right? Because you have to have a brokerage account and you've got to do KYC AML to access it. But I think that what gets missed in this is that ultimately there are people who need Bitcoin pragmatically for the utility of the self-sovereignty. And then there are people who want Bitcoin for the financial returns. And sometimes that can be the same person, right? Where they're like, I only need this much Bitcoin to hedge against tail risk of my government becoming tyrannical. But then for the rest of my portfolio, I'm actually happy to keep that at Charles Schwab, and I want to have leverage long Bitcoin.
Yeah, so on that note, obviously my company Swan, we focus on helping leaders of families and businesses invest in Bitcoin, right? And that seems to be something that is a theme for almost any person or almost any entity, from the individual to the family to the small business to the corporate to the union to the church are we all just kind of doing different flavors of the exact same strategy?
Well, I think that there is a universal need across any kind of entity to be planning for the future. And I think that what Bitcoin allows you to do is to have a monetary asset that has infinite duration, where it's not getting eaten away by inflation. You don't have to constantly be checking the SEC's website to make sure that management is doing what you expect them to do. And so that kind of flavor of savings asset for monetary uses, long-term savings, that I think is universal need no matter what organization it is. And I think that we're going to enter into a phase where there just needs to be, I really think it's like just information asymmetry, right? That in this room, we've got a lot of education, we've got a lot of educated people, they understand what Bitcoin is, what the value proposition is. Outside of this room, we've got great brand recognition, right? So like more than 95% of people, they've heard the word Bitcoin, they know about Bitcoin. But what they don't have is that deeper understanding that would actually enable them to go out and take that jump and to go buy a hardware wallet, to sign up on Swan, to buy Bitcoin. And that moment, it's interesting because we're already at $2 trillion of market cap. But when I look at adoption from a percentage of balance sheet perspective, we're at less than 1% global adoption. And so I really think that what we're doing today, but also obviously on X and on all of these online platforms, crucial for growing that percentage.
Yeah. Well, thank you so much to GW for hosting us and the Swan team for supporting. And Pierre, this was wonderful catching up with you. Thank you, everyone.
Thank you guys so much. Another round of applause.